rock and roll here. So we are on tactic 7. I don't think this could probably be better timed for those of you that are actively engaged in selling in the day-to-day market. What are you seeing right now? Because I'm getting a hot sheet drip, and probably out of the 6 houses sent to me this morning, 4 of them were price reductions. So we are definitely seeing some normalization, as I'm going to call it, and some correcting happening. So what are you seeing if you're actively engaged right now? Lynn, I'd love to hear your insights.
Sure. Basically what you're talking about, we are seeing the price reductions, and this chapter is just spot on. And I read it last night, and it's just such a reminder of how important it is that we're really educating, and even ourselves doing our homework properly, particularly with the listing, from a listing perspective, to help people get where they're wanting to go. I think it's a hard discussion, and I think it's one that you really have to have the trust of your client in order for it to hit the mark that it needs to hit. But we're seeing the same things: properties days on market expanding, and the price reductions combined. I mean, it's just
so on page 135, it says, when the market shifts, first buyers, then sellers become overly guarded, and it sets in motion a game of the price is right. In this version, instead of guessing there's no top, buyers now predict there's no bottom, when previously they were aggressively pushing prices forward. Do you remember, like 3 months ago, we were in multiple offers and 50,000 due diligence, right? Now they're equally aggressive in trying to pull them back. So now it's going, oh, we hit our ceiling. Now we're going to pull you back and get you back here to where we think you should be. So the question becomes, an answer of sorts is, what is the price, right? So we have to decide, how do we keep people motivated? We have to keep our sellers motivated and realistic, and we have to keep the buyers motivated. So a shift is going to expose and magnify the real estate price conflict, right? So we can't really ask the seller anymore, what do you want for your home? Right? We cannot walk in and ask that question. We have to come prepared with the data and do the homework now that's necessary. And it's going to look a little bit different because we still have the inventory to qualify all of our markets as a seller's market. We still have that inventory. We are still 6 months or less according to our inventory. When we hit a balance market, that's at 6 months. And then 6 months or more, we know we're in a buyer's market. But what is happening is the pendulum is swinging. So, and it's going to go slowly and then suddenly. And so the narrative and the dialogue that we're having with the buyer is going to be everything. So what were some ahas from a few people that you got from this chapter? Please share.
A house being Elizabeth, not on the market, but in the market. So you have to be priced correctly. And even, I'm coming from the Philadelphia area, even though it was, a hot market and it started shifting before I left, I would never say to a seller, what do you want to price your house at? I would ask them what they thought it was worth, but then I tell them what it should be priced at, gave them a range. And if they want to overprice it, then I have to make the decision, do I want that listing or not? Because, you can build in a de-escalation into it with price reductions, but after 5 days in the hot market, if it's not sold, you're out of luck. So now it is shifting.
And that leads right into that window of opportunity, right? What does the window of opportunity mean?
Yeah, very tiny window of opportunity when it's a seller's market. Yep.
Yeah, so that's when it first hits the market, that's our moment, right? So we want to try to price ahead of it, not behind it. So we, at this point now, we got to go, okay, let's be a little aggressive because this is our window of opportunity. Now, it does talk about the 5 stages of grief that a seller is going to go through, right? So we always say in real estate, there's 2 moves. There's the emotional move and the physical move. We got to honor that when we're working with buyers and sellers. So they're going to go through denial, anger. They're going to try to bargain with us, and then they're going to be depressed, and then they're going to accept it, right? So what the beautiful thing about, I think, the forecast of the future with the recession versus the past recession is this: we have sellers in a much better financial position than we did in the previous market. I really believe economically we're in a better place. We had people buying in a bubble. We have, in the previous recession, we had people upside down. We had people with limited equity. We were seeing in California 30% appreciation rates, and they were buying all over the country on that bubble. This time's not going to be like last time. There are people with capital. There are people with cash. 25% of purchases have been cash. So we got smarter, which is just great, right? And so the ingredients are going to look a little bit different, but the stages are going to be the same. You're still going to see that shift in behavior come through. So what are some other ahas?
I'm trying to find where it was written, but it talks about differentiating between, and I have this conversation with myself. Well, I know the house is worth this. So from a value standpoint, no one disputes that the house isn't worth this, or you couldn't build it. You couldn't build the house for that price right now. But that doesn't necessarily equate to what the market is going to be willing to support. And that's where I think having a good script where your dialogue down, where you can drive certain points. And you know, I think the charts, which I have not used, may be particularly now another way to help drive the point and help people understand it graphically, because I think visual aids will help, because sometimes words you don't want to hear it, it'll go in one ear and out the other.
Yeah, I agree, Lynn. One of my very favorite graphs is the one on page 150 and 151 about pricing in the market. And when you look at page 138, that price reduction effect, when we price it right, we can get 40 days on the market without a price reduction. When we price it high, the other thing happens. There's a price reduction, which hurts the property, and then it doubles and triples sometimes the days on market. So it talks about, let's not chase the market, let's let the market chase us, right? And I think what you're saying is we have to get sellers back to the net. What is the net effect of what you're going to be making versus, you know, they get into their head about worth, when we got to go, okay, what's the seller net? This is still an incredible investment, and we got to start speaking that language to them. Other ahas.
Yeah, on page 142, I'm kind of piggybacking off Lynn there. It says sellers must first decide if they really need or want to sell. And this is a strategic question, not a value question. It says when a seller wants to sell and a property valuation has determined a price range for the home might sell for at that time, a pricing strategy must now be chosen. And it's an important decision, because do they want to sell for the maximum price, or do they want the maximum price possible? Because that is determined on the market. And then on page 150, I kind of pulled those together because it said a well-priced property is getting multiple offers. And immediately my head went to what we just experienced in this market, where there was multiple offers and it drove the price up. So you might even get more than your asking price because you had more traffic, more interested buyers that knew that there was multiple offers on the table. And if you really want the listing, it goes up a little bit. But it said, meanwhile, the overpriced properties were getting none, which could mean they weren't even getting showings or interest because people were just going to wait. So I do think that even pricing right comes with opportunities to get more, just because of the visibility and the opportunity.
Well, and that's the
Tara,
auction effect. Yep.
I'm sorry, Tara, to that, you're right, because even as the market shifts to a buyer's market and market price might come down a little bit, if you're priced just under that market price, you're going to drive more showings, more visibility. Where, you know, you price it too high and it's just going to sit and then go stale.
And
Agreed.
I've got,
Yeah, and I
I've got,
think,
go ahead.
go ahead, Lynn. Nope.
All right, well, I've got a case in point example. In fact, we're closing tomorrow on this particular property. I had the listing, and property needed to be sold. I had two clients, the husband and wife. One was strongly ready to go, the other was reluctantly ready to go with it. There was a lot of emotion tied to this, and so I knew right from the get-go, if we didn't price it right and get it under contract like right away, we were all in trouble. And so we kind of talked through the pricing, picked a price, and when we went on the market, it going, are we priced too low? Our neighbor says this, that, and I said, no. I said, we are not priced too low. And the very thing happened in this market, and this was just a few weeks ago. We came in, we had multiple bids. We went back and forth. It was crazy land for too long, but we landed on one of the offers, and we're getting through it. But I could see where this would have sat out there, even if we'd been just a little bit higher, for way too long. And I don't know that the emotions would have even survived with this couple. You know, just
Yeah, and good job. And I think that we're starting to see that already in pockets of the
Yes.
market, depending on price points. I talked to someone who's got a 1.4, and that, you know, the seller feels like it's right at the price, and they've had no showings. So, you know, we really got to watch the pockets. And it does talk about, beyond just doing a CMA, bringing absorption rates, bringing charts. So knowing what's moving in what pocket of prices and what zip code, right? So you're going to have different areas of the market that are still going to pop. I'm a really great example that can't find a house right now in that 550 to 650 price point that I want to pull the trigger on, and there's not a lot out there. So, you know, if I were an agent, I'd go farm the heck out of that price point, because where are your areas of opportunity right now as a listing agent? Know where there's a shortage in inventory, and then go door knock that area, circle prospect that area, send your seller letters that area, go get that inventory. I would not be going to get the $3 million inventory right now. I'd go get the $300,000 to the $600,000 inventory, right? There is still slim pickings there. So as an agent, be strategic there. Then as a consultant, we have to know that, you know, and it talks about page 148, the challenge. Effective consultations are about bridging the gap. And it's the sellers, they want to live in the past. The buyers, they want to go ahead and head into the future. And so you got to bridge the gap through effective consulting. All right, other ahas.
So
I
of course,
What
this,
you got?
go
You
ahead.
go. Nope, you
Well,
go.
of course, this book, like the whole thing, is going to continue to point out that this is going to be a skills-based market. So one thing that we've even talked about on the pivot shift call on page 138, it says a market shift absolutely underscores the importance of pricing and exposes cavalier agents who don't give it research attention and serious thought. The most successful agents will become masters of pricing and master in getting their sellers to trust the findings. So it's all about making sure that you have your research behind you as well. So even if you do price what looks to be below the market, it's actually a very strategic way of doing it. It's a forecasting. So on the next page, it says forecasting is an acquired skill, the exact ability to predict market direction and speed. And the one thing, like, of course, like, we're going to have a lot of sellers push back because they saw their neighbors get so much over what they thought they would, like all the over asking. But a really great script is on page 153, and it says, yes, we may not be able to price the home as high as we could have last year, but if you don't sell now, you'll be selling for even less next year. And that's just going to be gold when you're at your listing appointments.
Yeah, good share, Elizabeth. Couldn't agree more. That's awesome. And I think too, using the right language, and when you're at the appointment is, don't say reduction, say adjustment, and meeting the market where it is, and like try to really think about the language and the narratives, because words cause emotion. And so we really want to try to keep people in logic and make sure that we're really practicing our scripts. If you don't know, Myrtle Beach and Wilmington is hosting Bold, and that starts on the week of August 10th. And so if you're not signed up for that, you're crazy, because we are moving from a skill-based or a speed-based market to a skill-based market. It used to be speed wins. Now we're going back to skills wins. And you've got to understand and adopt the skills necessary to win in this market. All right, good share. Who else?
I was just going to say that I think there's an opportunity for us to come up with an activity, The Price is Right, with listings on the market. I think that would be cool.
That's good.
Yeah, I love it, Tara. And the other thing too would be go out and get previewing homes, because you've got to go see what, if you're a new agent and you're not taking listings right now, Jan, I don't know if that's you or not, but get into properties, know what things are being listed at, know what's moving, get out there, preview properties. I see realtor caravans coming back. I see broker opens coming back. I see open houses coming back in a big way. None of those things are bad, you guys. If you do an open house at a really high level, you're going to get listings and you're going to get buyers. I promise you. So there is silver linings in all of this. We really have not been extracting the lead potential off of our listings because they hit the market and sold. Now we're going to have buyer clicks again. We're going to have call-ins again, and we're going to expand our number of people that we're working with because of it. So identify the silver linings, identify the opportunities, and then capitalize on it, right? Because all we're doing is interpreting the market. The market is what the market is. This is economics 101. Supply and demand is going to start to take effect, and how we respond to it and how we interpret it is up to us. So on page 156, 7 maxims for pricing in a shifted market. Be a student and know your numbers. Focus on your main comps of actives, pendings, and sold. They might be out of date already, right? So we got to really look at the absorption. Be a student of the property, preview them so you understand why it and what it's selling and why. Keep your presentation as current as possible. Let your ongoing research do the talking. I am a low C on the disc by nature. Research was never my friend. So you better get really engaged with your local MLS and the stats that they're already pulling for you, and be taking those things and go in armed and equipped. Pre-qualify for motivation. Sellers who most need to sell most often. Price ahead of the market to avoid chasing it. Always secure price reductions in advance to avoid falling behind the market. Mary Ann said this, and I used to do it too. If we had 7 showings or in 7 days, no offers, we had an automatic price reduction. So I would get them to sign the price reduction form at the listing. So there may be some strategies that you need to start bringing back in to go, okay, Mr. and Mrs. Seller, we didn't get an offer. That means we missed the mark. Let's quickly move. So have a plan for that. All right. Any other ahas, or what action can you take after reading this chapter? What are you going to do different than something you've been doing before?
I'm going to get out and learn the neighborhoods and tour houses. Like preview for a client, even though I don't have one yet.
Love that. Well, while you're out there, Marianne, video, start your lifestyles. Look what's here. You can get this for that. Now you're going to see investors really start to show up, right? Because they feel like there hasn't been an opportunity. In the December of 2010, after the market shifted, I had 14 closings in December, and 12 of them were investors. They were eating it up. We have colleges around us. People want to invest in college towns. We have Airbnb, short-term rentals. Find the opportunities, right? Find the silver linings. Anything else? Oh, by the way, if you haven't done like a top 10 hot buy list before, they were gone. Now they might be sitting. You might be able to get back to doing those things again. And it doesn't have to be your listing. All right, what else?
I was gonna say, in part of is somewhere in this tactic, it talked about the MREA model and taking a listing, even though Mr. and Mrs. Seller are not, they're overpriced. And, you know, do you take it because of your reputation or not? So if you take it, I think you have to have your strategy in place to say, hey, if, you know, if you want to sell, what does that timeline look like? Because you're going to go ahead and advise them that we might be a little bit overpriced, but just go ahead and have in that, okay, well, within 2 weeks or 30 days, this is when we're going to have to make a correction, even though that's not ideal. That's going to give you the most success to potentially get it where it needs to be and have that clarity from the gate, because they know you're serious. Hey, I've gave you my advice of what it should be. I will take the listing and you'll get the marketing from it, but you're not going to hang on to it to where it should ruin your reputation for having extremely long listings on the market.
Yeah, and you guys might want to consider, if you're not already doing it, but you know, some sort of a 6% plus a $3.95 admin fee, right? Because you're going to start putting some marketing out there with some properties that may not sell. And so how can you be absorbing a little bit of that cost? And people do that anyways, regardless of the market, but this is a time to help absorb some cost. If you're selling a lot of homes, that adds up, that pays for that admin, that, you know, those things can be substantial. So don't hold back on your value just because the market's going to shift. If you need to get creative on rates, that's one of the fastest ways to increase profit is through rates. I've got a good friend in Illinois who does a 6, 7, 8 you pick. Almost every time the seller picks 7%, they co-broke 3, take 4, use 1% for marketing. So you can do a lot of things with rates, you know, and I'm not advertising that it needs to be a certain number, but you know, get out there and be creative, because you know, you can be disruptive and not have to cost your profitability. So, all right, awesome shares today. Thank you for being here. Keep spreading the word. We got Tactic 8 next week. We're moving along. We're over 50% of the book. We're going to talk about standing out from the competition, and I think staging's coming back. We talked about that last week. You know, we want to stand out. So it's going to be a pricing war with the beauty contest. All right, y'all have a good
what
day.
the next book might be, so we can start letting people get it and be ready for the next book club. I think that's a lot. People want to come, but they feel like they're coming in the middle.
I'm
The
here.
Road Less Stupid.
The Road
Yep.
Less Stupid.
The Road Less Stupid by Keith Cunningham. All right, y'all have a great day. Thanks for being
Bye.
here. Bye.
Appreciate it. Bye.